Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh, and very good afternoon to all of you. But good morning to Dr. Damak. On behalf of the organizers at Invest Jambahat, I would like to welcome the speakers and participants to our live webinar on Islamic Capital Market Outlook. Thank you for your support and participation to this webinar. So I would like to spend a few moments to make a housekeeping announcement. During the presentation and the discussion, all participants will be on listening mode only. All attendees are invited to participate the Q&A session after the discussion. Please click the raise hand button at the control panel if you like to ask questions. Attendees can also submit the question to the host using the chat panel in the control panel. Kindly introduce yourself before asking the question. If you have any general comment or need help, feel free to chat with the host. Please fill in the evaluation e-form. Host will share the e-form at the chat panel at the end of this session. Before we start, let me introduce our expert panelists. Start with our moderator, Mr. Zakariya Othman, Principal of Masryef Academy and former lead rating analyst for Saudi Credit Bureau and Rating Agency. Followed by speakers, Mr. Mohamed Safri Shahul Hamid, Senior Managing Director and Deputy CEO, Cimb Islamic and Cimb Group, Islamic Banking, Dr. Mohamed Damak, Senior Director and Global Head of Islamic Finance, Financial Services Research, S&P Global Ratings, Mr. Irwan Abdalloh, Head of Islamic Capital Market Division, Indonesia Stock Exchange, Ms. Shahariah Shaharudin, President Saturna Jambahat. Lastly, Professor Dr. Rabiah Adawiah, IIUM and member SAC of Bank Negara Malaysia and Securities Commission Malaysia. Now, I hand over the session to our moderator, Mr. Zakariya, to proceed. Thank you.
Thank you very much. Bismillahirrahmanirrahim. Alhamdulillah Rabbil Alameen. Wassalatu wassalam ashrafil anbiya wal mursalin wa ala alihi wa sahbihi ajma'in. Rabbi shrah li sadri wa yassir li amri wa hlul 'uqdatan min lisani yafqahu qawli. Amma ba'd. Distinguished speakers, ladies and gentlemen, Assalamu alaikum wa rahmatullahi wa barakatuh. And a very good afternoon to all of you except for Dr. Damak. He's still in the morning. Firstly, I would like to thank CERT for inviting me again to moderate this interesting topic of capital market at the backdrop of the ongoing COVID-19 pandemic, together with these great panel speakers that have been briefly introduced by the host. Thank you once again for your time and welcome aboard. Ladies and gentlemen, the uncertainty from COVID-19 will remain. Banks and capital market institutions have no choice but to remain hyper-vigilant and rewrite their business continuity playbooks as circumstances change. While it is reassuring to see some aggressive fiscal and monetary policy responses around the world already, clarity on how these actions will stabilize markets and accelerate the path to normalcy is actually slowly emerging. And in some cases, they are yet to emerge. However, the financial intermediaries and the customers can actually take some comfort that the capital ratios were the strongest going into this crisis than any other time in the last decade. As you can see, financial industry players need to actively consider the immediate needs of their people and the implications on the operational, financial, risk, and regulatory compliance. They have an opportunity to support the market and the economy activities and to facilitate a quick return to stability. And if banks and capital market firms respond well to these unprecedented challenges, they will not only help the society, but also increase the trust and the reputation of the financial industry in the long run. So, to start the session, I'm going to talk about the global capital market. As we can see, the global capital markets have continued to function well through the current period of significant market volatility, interest rate cuts, and diverse global stimulus packages. The immediate priority now, however, is to basically prevent the public health crisis from becoming an enduring financial crisis. And to better understand the situation, I would now like to call upon Dr. Mohamed Damak of SMP to share his thoughts, his outlook on capital market, specifically on Islamic capital market, of course, at the backdrop of this current pandemic. Dr. Damak, it's yours. Dr. Damak?
Yes, thank you very much again for the invitation, and very good morning and very good afternoon to all of you. So basically, I will start with a broad. Can you see my slides?
Yes.
Okay, good. Basically, I will start with a broad overview of the outlook for the sukuk market in 2020, and then briefly talk about how the industry can benefit from the COVID-19 pandemic in order to transform itself. Now, when we started the year 2020, we were expecting the sukuk market to display at least the same performance as last year. I think last year we saw a total volume of issuance of around $162 billion. And the year started relatively well. I recall until mid-February, for example, the volume of issuance was basically stable. And then all of a sudden came the COVID-19 and the oil price, and they decided that the performance would be otherwise. Now, together, COVID-19 and the oil price decline for the core Islamic finance countries looked at the perfect talk, leading to a major economic recession in most core Islamic finance countries, which are the GCC, Malaysia, Turkey, Indonesia, and because of obviously the social distanciation measures and the lockdown that were put in place by the different government, and overall led to a contraction of almost 38% of the volume of issuance until May 2020 compared with the same period last year. And if you look at the distribution, the drop was all over the place. I think the only exception was Saudi Arabia. Saudi Arabia has established a few years ago an unlimited local currency sukuk program and has kept on issuing under this program over the years. The other exception is Turkey. I think Turkey, as you all know, has been under a lot of pressure in terms of refinancing of external debt and had to reopen all the avenues available, including the Islamic finance avenue. The third exception was Kuwait, where we saw the Central Bank of Kuwait continuing with the issuance of sukuk as liquidity management instrument for the Kuwaiti banking system and replacing the existing stock of short-term sukuk. However, if you exclude all these countries, the drop was almost everywhere. So you look at Qatar, you look at Malaysia, you look at Indonesia, the drop was almost everywhere. And this is why we now expect the volume of sukuk issuance to reach around $100 billion in 2020 compared with $162 billion in 2019. And that is a 40% drop. Why is that? Few reasons. The first and foremost is that the central banks in the core Islamic finance countries, as any other central bank in the world, has decided to open the liquidity tap and offering a 0% cost liquidity facility to their banking system in several countries, in several core Islamic finance countries, and ask the bank to use that liquidity in order to provide subsidized loans to the impacted corporates and to the retail client. And the whole idea of the central banks is to avoid the destruction, the permanent destruction of the productive capacity in their countries. And as such, what we have observed is that today there's no incentive to the corporates to go to the market and to raise funding. And also, if you add to that the fact that most of the corporate have been cutting their capex and holding to cash because of the global uncertainty, you end up with a situation where corporates are no longer issuing, but are rather going to the banks in order to refinance their maturities or to raise additional funding. The second reason is the fact that central banks over the last few years, and especially in countries where Islamic finance is a core component of the financial system, have been offering sukuk as short-term liquidity management instrument. And in today's environment, there's no reason to do that anymore. The central banks are rather injecting the liquidity into the banking system rather than offering instruments to take back the liquidity of the banking system. And overall, the central banks in last year, for example, contributed to around 17.5% of the total amount of issuance. And this year, we think that there will be a major drop in the in this volume of issuance. The third reason is the change in investor sentiment. And that was particularly striking. I think we've seen in several emerging markets, investors exiting at unprecedented paces. Like if you see the capital outflows, for example, from here, I'm showing some core Islamic finance countries. But if you see the capital outflows, the speed of exit was really unprecedented. The good news is that the situation started to reverse slightly, given the measures that have been taken by the global central banks and given the strong liquidity globally, which pushed some investors to start to chase yield actively. And finally, the reason why we think sukuk volume issuance would drop this year is one could ask, we're in the middle of a deep recession, the government coffers are empty, why they're not issuing sukuk? They need the money, at least if you look at the government here in the GCC. Their revenues have dropped because of the oil price. Their other revenues, the fiscal revenues, although to some extent there's no income tax or corporate tax in this part of the world, but their other revenues have also dropped because of the drop in the economic growth. So why they're not issuing sukuk? And the answer is that they're issuing conventional bonds. And it's the fourth reason why we think that the sukuk issuance will drop. It's because sukuk today, except in few countries or except for few issuers that have established existing programs, sukuk today remain more difficult to issue compared with conventional bond, and the instrument and for the governments and for the issuers that need money immediately, they do prefer to go the conventional route because it's easier for them. Now, the question that you're probably asking yourself, how Islamic finance can make a difference in this environment? I think it can. And I think if all the stakeholders work together to make the sukuk issuance process more attractive to issuers, and that could be achieved through inclusive standardization. And I'm saying inclusive because what we have observed is that the standard setters in the world tend to work in silos. There's no platform or no discussion between the standard setters and the market in order to incorporate the feedback of the market. And sometimes you end up with proposals of standards that would not be applicable in the market. You all remember the proposal of the IIUM last year on the sukuk governance framework that, if it was adopted as it was proposed, could have had some major negative impact on the volume of issuance of the sukuk. And again, we're still in an environment where some products are considered as compliant in Asia Pacific and considered as not compliant here. The tangibility ratio, the structures that involve commodity murabaha, for example. And we're still in an environment where issuers take a much longer time to structure sukuk and to tap the market compared with conventional bond, unless they have a program in place. But the good news here is that the Dubai Islamic Economy Development Center stated recently that they will work on that specific challenge and try to come up with an international legislative framework for Islamic finance. The question is that we don't know when and in what shape the output of this project would be, but the fact of working on that project is already a step in the right direction for the global industry of Islamic finance. Now, the other area where Islamic finance could make a difference given the current environment is everything that is related to ESG, environmental, social, and governance. And I think here there are a few low-hanging fruit, green sukuk for the E, for example, social product for the S, and the stronger governance framework of the industry for the G, given the fact that the industry is subject to an additional layer of governance, which is the Sharia supervision in addition to the supervision applicable to the conventional finance. But specifically in the context of COVID-19, I think the S can prove to be critical because it can put back the Islamic finance on everyone map by demonstrating that it has specific products and offering that could be used to help people, corporates, banks, sovereigns to navigate through the current environment. Let me give you a few examples. One of them is Qard Hasan. Qard Hasan, this would be similar to what the central banks have been doing in the region, for example. They've been offering liquidity at 0% and asking the bank to use this liquidity to provide subsidized loans to their clients to avoid disruptive capacity. Another example is the use of social sukuk. We've seen that happening in the past. I think we've seen issuance of social sukuk in Malaysia in the past. And we think that fundamentally in this environment, issuing social sukuk could help speak not only to the Islamic investors, those who are interested in the Sharia compliant nature of the transaction, but also the ESG investors that may or may not be interested by the Sharia compliant aspect, but are more interested by the ESG aspect. The other product that I can think of is Waqf. I think unemployment, unfortunately, is hitting the roof in many core Islamic finance countries because of the COVID-19 induced economic crisis. And Waqf in this environment can offer some affordable solution for the people that were impacted by offering affordable education, for example, or offering affordable healthcare. Again, I think for Waqf, the challenge is to have a proper governance framework that makes sure that the money is not diverted from its original purpose. And I think the IIUM has been working on a governance framework for Waqf. I'm not sure if it was approved or if it was published. The last time I checked, it was not. And the final product that I can see, which could make a difference in this environment, is zakat, which can be used to compensate for the people who have lost a portion of their net income. And I think leveraging these instruments in the current pandemic could create a unique opportunity for Islamic finance to come back on everyone's radar. Thank you very much for your attention.
Okay. Thank you, Dr. Damak. Okay. So it's very comprehensive, and I like the point where you raised about the Sharia standard harmonization. And I believe the debate about Sharia harmonization has been going on and on and on since I first started to be in the industry, and I'm almost retiring from the industry, and they're still debating on that. So let's hope for the best. Okay, I think Dr. Damak has basically spoken to us, basically presented his view on the sukuk market. Maybe let's try to look into the asset management. Okay. As you can see that we have enjoyed a boom in asset prices, driving equities ever higher, as well as the hedge funds and private equity investors alike. Unprecedented cheap debt has induced a splurge in borrowing to fund stock buybacks and leverage expansions across many industries and economies. While the here and now seems incomprehensible, there's a good reason to hope much can be recovered. Taking action now will help ensure the asset management industry can actually rebound when the time comes. And there are many very opportunities out there for those who actually seek for them. So now my question to Ms. Shahariah. Is that still a reality now with this COVID-19 going on? What is actually the potential growth in Islamic asset management industry? Both, maybe we can compare in Malaysia as well as, yes, Ms. Shahariah.
Can you hear me now? Assalamualaikum.
Waalaikumsalam.
First and foremost, thank you to CERT for having me be part of the panel for today's webinar, and allow me to introduce Saturna Sindang Berhad before I move on to answer Mr. Zakariya's questions. Okay, for those who have not known who is Saturna or have not heard of Saturna, Saturna Sindang Berhad is actually a wholly owned, we are owned by Saturna Capital, which is actually is an asset management company which is based in America. Our headquarters is in Bellingham, and Saturna Group actually is a Sharia compliance asset management house which practice ESG and responsible investment focus for the last 30 years. And Saturna Capital has been around for the last 30 years, and we are one of the managing one of the oldest Islamic funds in the world, and we are also UNPRI signatories. And Saturna Sindang Berhad is licensed under the financial asset management company regulated by Saturna, regulated by the SE. Okay. So what do we do here? We actually manage institutional funds, private mandates, and individual funds as well. So we are also managing an ASEAN equity fund and also the ICD Global Sustainable Fund. We have experienced analysts and as well as experienced team of global funds managers in Malaysia and also in US. Okay, I think I can start on the slide now. Okay, can I have the slide now? Thank you. Okay, we can move on to the I think slide number 4. Okay, we'll go through the overview of global Islamic funds, and I'll touch on the Malaysian Islamic asset management market, and we'll also go through the ESG and SRI space, and before I conclude the way forward. Okay, next slide. So we are looking at now is the distribution of global Islamic finance assets. And as you see here, the biggest share of the Islamic finance asset is Islamic banking, 70%, followed by sukuk, other Islamic financial institutions, maybe have Islamic funds and takaful. Here we are focusing on the Islamic funds. As of 2018, total funds outstanding is 108 billion. And this is made up of mutual funds, 97 mutual funds, 9 exchange-traded funds, insurance funds, and a small portion of the pension funds. And can we move to the next slide? Okay, thank you. And for this one, if you look at the graph on the right, it shows the Islamic fund asset growth since 2012 to 2018. Islamic fund assets grew at an average of 12% from 2013 to 2018. And Islamic fund assets expected to reach 216 billion mark by 2024. And the top 3 markets for global Islamic fund outstanding in 2018 were Oman, Oman with a $35 billion, and Malaysia 27 billion for Islamic fund outstanding, and Saudi Arabia 21 billion. The fastest growing market for 2018 for the Islamic fund assets are Qatar, Oman, and Indonesia. So these are the new growth area for the Islamic funds. Next, please. I'm just highlighting some of the products under the Malaysian Islamic Asset Management. We have Sukuk funds, Shariah compliant equities, exchange traded funds, real estate investment trust, REITs, Islamic mutual funds, and Islamic money market instrument. Next. Next, please. Okay, this table is just to show you the asset allocation of Shariah investment in Malaysia. And from 2017 to 2019, in 2017, the AUM in total is 170 billion ringgit. And in 2018, it dropped to 158 billion. And 2019, it went up to 180 billion. So as we know, in 2018, there's a global market came off. And so that impacted the Islamic, the Shariah investment in Malaysia too. Thank you. Next. This is just to see some Shariah equities development in Malaysia. Malaysia is one of the first Muslim country to develop a stock screening methodology. This was undertaken by Securities Commission of Malaysia sometime in 1995, and I think in 2012 there is incorporation of the quantitative and qualitative factors. And currently, and that has led to the development of Shariah stock indexes, where currently we have FBM Emas Shariah Index, we have FBM Hijrah Shariah Index, and Dow Jones Islamic Malaysia Titan 25. Okay, next please. Next. This is, okay, I'm just highlighting on the passive investment strategy. Where these exchange traded funds, which are popular in developed countries. So we also have it in the Islamic space, but as we highlighted earlier, there's 9 exchange traded Islamic exchange traded funds, and they are growing. And the ETF is actually mimicking an index. So an Islamic ETF will simply have constituent stocks that have passed Shariah screening. And in Malaysia, we have 5 Shariah compliant ETFs. We have My ETF Dow Jones US Titan 50, just to name a few. My ETF Dow Jones Islamic Market Malaysia Titan 25. Okay, next. See, here I'm moving from the Shariah screening. Here we are moving into the SRI space. Okay, here we will be looking at why we want to do SRI, okay, from the Shariah space to the SRI. Why we want to do that? I think we want to do SRI because we want to have a world that is prospering. We want to take care of the people. We want to take care of the planet. So we are talking about 3 P's here. Prosperity, people, and planet. So we are, if you think you care for the profit and you care for the people and you care for the planet, then we are in the SRI space. Okay. then this SRI framework, everyone can fall under the SRI framework. Like I'm a Muslim and my religion comes first, so I want to invest in Islamic finance. So Islamic finance will fall under the SRI as well. So if you ask another person, I'm okay with interest rate, and but I don't want to invest something in weapons. So that no weapons for him is also an SRI. That's what SRI means to him. Let's say if you were to ask a person who is what you call it, human rights activist, then he will say that I care about I want to know whether the companies take care of their employee. And I care about human rights. And also I want to know gender diversity in the company. So then they fall under the social portion, which is also SRI to them. And if we are talking to people who are Greenpeace organization, then they will look at, I want to protect the environment. So I care about whether the water is utilized efficiently, no cutting of trees, and where do you throw your trash, where you dump it. So I care about the environment. So you also these people falls under the environment portion, which also SRI. So here what we're saying here is that to different people, it means different for their SRI. So, and this falls, that's ESG factors actually fall under SRI. So the Islamic finance factors fall under SRI. So now we go back to this slide. We say, what is driving SRI growth? So here we have three drivers of SRI growth: the regulators, demand. Regulators, demand will come from institutions, from individuals, and supply. So supply of the products will come from the asset management house. And of course, regulators will assist in harmonization and standardization of the guidelines and to put that in place. Next slide. This is just showing a survey that was done in America that for investors who favor social and environment factors over financial. So 67% favor social and environment factors and 30% over financial. So the investors' preference has actually changed now. So people are moving into the social and environmental factors. Next, please. Here we were saying that ESG falls under the SRI. So what is ESG? ESG is a matrix or a ratio measuring SRI. So under ESG, there is environmental, there is social factors, and then the governance factors. We here in Saturna, we analyze the environmental factors. We do the ESG screening, so we will analyze the environmental factors, the social factors, and the governance factors. And the environmental factors, we have climate change. This is just some examples. Carbon emissions. You can have a company that produce a lot of smoke, and that will have a very bad scoring for as under environmental. So you are exposing to high environmental risks. And if you're looking at water pollution, or you can have a company that use a lot of water, and that will lead to water pollution, or it can even go to water scarcity. So they will not score high on the environmental. But let's say if you have a soft code or a technology company which doesn't have the chimneys or what, doesn't produce any smoke and doesn't use water, so they might score high on the environmental side. So here's some example to look at social factors where we have lined up like product safety. Example is the telephone company that we had earlier, which has a faulty battery which explode and it cause health issues. That falls under social factors. Yeah, so they will not score high on that on the social part of it. And for data protection and privacy, we know earlier there is this Blue Network company which actually shared their data with some particular parties and that political parties, and that led to what do you call this, an election decision which has impact on the social factors. So here we are saying that gender diversity, all these factors, employee engagement, some company, I mean, we want to invest in a company that really thinks about the employees, whether they pay up, whether they give fair wages, whether they take care of them, whether there is male and female in their working office. So those are the social factors that we will give scoring to these social factors. And then we have the governance. I think governance is closer to us because being a financial companies, we have to abide to a lot of guidelines. So governance will play a big role in financial companies. And especially when we talk about board composition, we want to check into the company whether they have independent directors, whether the board composition is there's female in the board composition, or whether there's only 80 years old lawyers, and I mean we want a mixture of the young and the mature people in the board composition, because this is important, because it will lead to other malpractices, or it can go to political contribution, it can go to bribery and corruption. So this, what we do here is we actually give score to the environment factors, social factors, and the governance factors, and then we integrate this score to give a rating to the sustainable rating, we call that. If the sustainable rating shows high risk, then we would not want to invest in that company. If the sustainable rating shows a low risk, then we will invest in the company, besides looking at the financials as well. Okay, next slide, please. I'll move on to the next one. Okay, this is just a sample of the ESG scoring, where you go into the environment, social, and you give them a rating. Then you integrate this to give a single rating. Okay, next slide. Here I'm just linking the Shahariah screening and the ESG screening, giving a performance to their portfolio. 10 years ago, we would be just looking at financial ratios. We're looking at the revenue growth, we're looking at the PE ratios, and so forth. So today, we look at Shahariah screening, we include the ESG screening, and as well as the financial ratios. Next slide. Here, I'm coming to the end of the slide. Way forward. You can get good returns, but be mindful of the ESG as well, and increasing client demand for sustainable products. ESG may strengthen your financial performance. Suppliers of ESG funds are improving. Call for more harmonization and standardization by the regulators. And as ESG grows, Islamic investing is a natural fit. ESG should be incorporated because it's the right thing to do. And Securities Commission of Malaysia have moved to SRI, and we have, I know that SC has come up with the 2 SRI framework that is on the bonds and on the equities framework. And with that, I end up my presentation. I'll pass it to Dr. Zakariya. Thank you.
Thank you, Shahariah. Okay, a second thank for awarding me doctorship. Okay, I think it's interesting to know that apart from this COVID-19 pandemic, we are basically at the same time we are moving towards the ESG, SRIs, and we have all sort of instruments that actually can facilitate the growth of the economy. So now, let us look at the regional market. In this case, we are looking at Indonesia. As you can see, the Indonesian capital market shows that there is still positive growth amid the COVID-19 pandemic. And one of them is the high interest of companies to actually enter the capital market and get their shares listed on the Indonesia Stock Exchange, or in short, IDX. In fact, as of April 23rd, 2020, there have been 26 new companies listed on the Indonesian Stock Exchange and have contributed in advancing the Indonesian capital market industry. And not only that, on the same day, there were like 28 companies that enter new stock listing pipeline. So, Bapak Irwan, Could you please update us on the latest Indonesian capital market performance, and what are the key success factors behind the positive growth, which I mentioned earlier? You know, Indonesia used to be called or to be termed as the sleeping giant. I think now Indonesia is about to wake up. It's still at the twilight zone. So maybe Bapak Irwan can elaborate further.
Thank you, Dr. Zakariya. Baik, Assalamualaikum warahmatullahi wabarakatuh. First, this is the first time I enjoy the webinar with CERT, and this is great because we can share everything about the Islamic capital market development in Indonesia, and I will show you something about it. Let me share my presentation. Okay, can you see my presentation?
Yes.
Okay, I will try to explain that Mr. Zakariya said before that in the COVID-19 pandemic, we are still growing. Everything is still increasing in Islamic capital market in Indonesia. So I said that everything is well controlled. Okay. Let me show the first data. Look at the data. I will try to compare the current condition and the mortgage crisis in 28 and the financial crisis in 98. Okay, you can see from the data that the current economic condition is much better. You can see for the GDP growth is still positive, 2.97%. Currency depreciation is still low, only negative 6%. Inflation rate is under control, 2.2. Non-performing loan in the banking is still low, 2.8. And you see our forex reserve is higher than mortgage crisis and the financial crisis. So this is the Indonesia. This is the fact, this is the data that Indonesia is still under control. Our condition economic is much, much better than before. So nothing to worry about it. Yes, if you see the global data, every country in the world hit by the pandemic. Also Indonesia. If you see from the the global market, the data show that our capital outflow, but this is the time for the local investor to come to the market. This is the time to show to the world that we are exist. This is the time to show to the global market that local investor is exist. Okay, let's see I want to share from the demand side and the supply side. Because why? Because Mr. Zakariya shared about the listed company, the new listed company is from the supply side. And how about the demand? Without the demand side, we can develop a market in the in the good development. First, this is about the demand side of the Islamic capital market of Indonesia. Demand for Sharia-based investment project in Indonesia will continue to increase in the future. You can see from the first data. This is the Islamic investor growth. Okay, we only need 8 years to increase 1,373,000%. This is the local investor. We grow very fast. We grow significantly. And I think this is the faster growth in the world. And I believe it. in the time of May 22, as of May of 22, we still grow. Yes, only 8%. But if we see the data, the historical data shared, our growth is came from the second semester, not the first semester. The growth in second semester is higher than the first semester. That's why we are still believe that the market is there, the demand is there. Okay, and the second data show. This is about the Islamic mutual fund growth from the value. Okay, Mrs. Shahariah said that the Islamic fund in Indonesia is, is very prospective in the future. Let me show the data. Per May 2022, we still grow 7%. Meanwhile, the value of non-Sharia mutual funds actually dropped, negative 40%. We grew 7%. It's only 5 months. Let me show another fact about our market. Okay, this is very interesting. Even though the return of Islamic indices we negative, as you know, we have three Islamic indexes. First, the composite. Second and third is about the liquid index. Yes, yet to date is we got the negative return, but the number of Sharia stock transactions by Islamic investor increased 11%, while the volume increased significantly, 80%. This is the very interesting data. While the number of the growth of the Islamic investor is slower than before, but everybody transact. Everybody do transaction. So the volume increased 80%. It's very significant. Only five months. And all the data show about the retail. Without getting the corporate, because the corporate, the market player will come to the corporate market. Everybody want to come to the retail market because costly. So the IDX come to the retail market to push the market to invest in the Islamic stocks. Another fact, you can see when the government issued the retail sukuk in March, we are oversubscribed by 1.6 times. This is retail market, retail sukuk for the local retail market, not for global. Okay, and the newest global sukuk issued by Indonesia is oversubscribed 6.7 times, and the coupon is the lowest, and the tenor is the first 30 years tenor with the lowest coupon. Well, yes, our market has a negative outflow from the foreign, but we no worry because we have the huge potential market from the retail market, our own market. Okay, this is the data from the demand side. So we strongly believe the demand for Sharia-based investment products in Indonesia will continue to increase in the future. Let me show you another data from the supply side. The Islamic capital market is increasingly becoming the choice of funding for Indonesian economic development. This is very interesting. both sides, from the industry, from the commercial, from the corporate, and the government side. Okay. I use something, show you something about the first data. The first data talk about the Islamic stock growth. Okay, you can see only 5 months we can hit the 1 year growth in previous year. 2019 only 1% growth grew. But year to date, 2020, 11%. Okay, and Mr. Zakariya said about the new listed Islamic stock. Yes, as May 2020, there has been 28 new listed Islamic stock, and 79% of that is Islamic stock. That's why the growth is 11%, only 5 months. And we have there are still 20 listed companies candidate in the pipeline, and we believe more than 50% are Islamic stock. But from the corporate side, okay, let's see from the government sukuk. This data is not about, I don't want to sell about the global sukuk. I mean, everybody knows, okay? Everybody can find the data. So I want to share about the retail sukuk. This is our characters. Okay, the government sukuk every year increase, and you can see in 7 years, the government sukuk increased by 385% until May 2020, and still in the pipeline for the end of 2020. The data is not include the newest global sukuk, not included. You can see our market is grown from the both sides, the demand and the supply side. The question is, what is the key? Why our market so beautiful, so interesting? Why we are still grow? This is the key. If we talk about the Islamic capital market in Indonesia, we talk the 2 factors, the retail market and the technology. The retail market means Indonesia is 68% of Indonesians are young people with median age is 28 years old. 28 years old. We call it the potential retail market. Islamic investors in Indonesia are dominated by millennials. 34% of the total sukuk investors and 65% of total stock investors are millennials. You can imagine how they are, right? You can imagine how the millennial characters came in your mind. So we can define how to grab the market in Indonesia. What is this? Technology. Because when we talk about the millennial, when we talk about the young people, it's nonsense if we obey the technology. Technology is the key for them. And the other strategy we use is we call the communities-based development strategy. So we develop some communities, okay, and we support them. as our network to create the market. Because Indonesia is the largest country in the world with the archipelago, a lot of islands. We have a lot of islands. Maybe one of the biggest archipelago country in the world. So we must trying a new strategy to grab the huge market. Let me show you about the technology, what we should build in the past 7 years. IDX create what we call it the Shahariah online trading stocks. This is the first Islamic fintech in the world, I believe, which converts fatwa into the online trading platform. You can imagine, we have a fatwa, talk about the trading Islamic stock in the regular market. So we convert the fatwa to be the platform. Okay, so investor, the retail investor, can use that platform as a tool for investing in the Islamic stock without worry about the Islamic principle, without need to read the fatwa. All the platforms said all about the Islamic principle. And the second one, the sale of retail sukuk has been entirely done online. You can imagine it. If you want to buy the retail sukuk, you come to the distribution agent, to the bank, or to the investment manager. So they said, oh, you should buy from the online.
Sorry to interrupt, Irwan. So is it okay if you can actually shorten it out because there are two more?
Yes, this is the last one.
Yes.
Please, everybody, be prepared. But don't worry, everything is well controlled. Thank you. Assalamualaikum warahmatullahi wabarakatuh.
Thank you very much. I think it's a very enlightening kind of data, and it's quite interesting to see that the numbers spiking, at least the first 5 months. Okay, and okay, we have talked about the capital market, particularly in Sukuk. Then we have already talked about the asset management, and we have also gone into the regional market, especially Indonesia, which is basically growing up or coming up fast. So now I think I'd just like to narrow it down into more of the intermediary itself. See, and with the outlooks of suggesting that this pandemic will be prolonged, and definitely it will impact on the markets, will impact on the bank's processes, as well as the client's proposition. So my question to Brother Safri, where do you actually see CIMB in this situation? How is the bank adapting to the new normal? So maybe Safri could elaborate more on that.
Assalamualaikum warahmatullahi wabarakatuh, and a very good afternoon to all. Saudara Zakariya and fellow panelists, can you guys hear me well? Loud and clear?
Yes.
Okay. Thank you so much, Zakariya, for that question. I kind of expected that question. So I think we are in a very, very unprecedented times, and nobody has a crystal ball to predict the future. So no one is spared, and that includes an investment bank and an Islamic bank, such as CIMB, investment bank and CIMB Islamic. So to your question, right, the depth and the length of the economic destruction brought about by this COVID-19 or the pandemic, as you put it, is yet to be determined, and the length of it is still well, questionable. So what there will undoubtedly be a short to medium term impact on all segments of the economies, including the banks, commercial banks, Islamic banks, investment banks, and even the asset management companies, insurance companies, basically the entire financial industry, intermediaries, and participants. So we do expect obviously lower revenues and profitabilities this year, with an uptick in, for banks, for example, in the loan loss provisions, for the investment banks in the number of deals, and for the asset management companies, for example, in terms of the withdrawals coming in from the unit holders, and the possibility of people staying on the sidelines and not wanting to invest monies. And that applies to everyone, right? From all walks of life. If you're looking at banks, the banks will become slightly less gung-ho when it comes to providing financing or lending to new clients. When it comes to sukuk, for example, if they were deals to be printed, the investors, typically the pension funds, the asset management companies, the banks, the insurance companies, and so on and so forth, the private banking units will be less gung-ho to invest in those sukuk or bonds. And for the asset management companies, if they're looking at setting up new funds, for example, they have to make sure that there are enough people out there that will be compelled to buy or to invest into the units. So the impact is, I would say, quite massive, right, to the banks as a whole, to the financial industry as a whole. And so obviously for CIMB point of view, we are not spared from all this. There will be some impact. So to the investment banks, there will be impacts in terms of the number of deals that we are seeing, or we have seen in the past, say, 3 months, when we had that lockdown, the circuit breaker, or the MCO, the movement control order in Malaysia, from the mid of March until the early of May. We basically saw very little activities in the markets, in the primary markets, even in the secondary markets, in the stock markets. The markets were quite stagnant, to if I could use that word. But having said that, after the MCO was relaxed, and prior to the relaxation of the MCO, we, from the 9th of May of this year, when the MCO was somewhat relaxed, we saw the a flurry of issuers coming out to the market, especially in the ringgit space and even in the global space. We saw the lights of Dubai Islamic, we saw the lights of some of the other names from GCC. We know that the Islamic Development Bank is in the market now, looking at issuing their first maiden sustainable sukuk. So there are flurry of activities in Malaysia, and so based on what we are seeing, based on what we are hearing in the market, it's going to be a very active June, July, going all the way to August. So we are looking at a 3-month period, 3-month horizon now. So our time frame has become shorter and shorter, given the uncertainties in the market. So, but if you're looking at the short term to medium term, 3 to about 4-month period, I think we're quite confident that the sukuk market is going to be okay in Malaysia. If I can just turn my attention to the Indonesian markets, I think my colleague has spoken so eloquently about the Indonesian market. Indonesia is it's a waking up giant, right? It's no longer a sleeping giant. And so we know that Indonesia is the market. It is where the next growth phase is going to be coming from Islamic finance in this part of the world. So we are monitoring Indonesia. Our unit in Indonesia, CIMB Niaga, has been doing extremely well in Indonesia, and that so-called the growth story of Niaga has been coming across from all segments, from consumer to commercial banking to corporate banking, and even in the space of treasury as well, when it comes to the FX business. And the sukuk space in Indonesia, yes, I mean Indonesia again has we saw a slow starter, if I can use that word, when it comes to Indonesia, but the rupiah sukuk market has been growing by leaps and bounds. Literally, almost what 30 to 40% of new issuances coming up from Indonesia has been in the rupiah space has been done under sukuk format. So we're seeing that progressive growth coming from Indonesia. So back to Malaysia, I've actually spoken about the sukuk market. Let me just I'm going to take a pause after this. I know given a time constraint, but let me just talk a bit about the equity market, because when one talk about the capital market, obviously we cannot not talk about the equity capital markets. So similarly in Malaysia, I think my colleague has spoken so eloquently as well about the asset management business. So we are seeing that activities growing in the Islamic equity capital market in Malaysia. As you know, Saudara Zakariya and the participants, almost 70% of the stocks listed on Bursa Malaysia are Sharia compliant stocks. So the SC of Malaysia, the Securities Commission of Malaysia has got fantastic explicit screening guidelines for equities. And now we are looking at sustainable screening guidelines that SC is mulling. They're looking at issuing sometime soon this year. So going back to the screening bit, so we are obviously looking at, we are seeing an increasing activities coming from the participants. Almost every single IPO prospect, when they are looking and they're talking about going to the IPO market, the initial public offering market, they will come to us, CIMB and the other banks, talking to us, wanting to do an Islamic IPO as opposed to doing a conventional IPO. And the reason for that is very obvious. By doing an Islamic IPO, you're able to appeal to the Islamic funds, such as Saturna, as an example, and the other Islamic funds. So the net is a lot wider, especially in Malaysia, when the ecosystem is probably the most complete in this not so perfect world where Islamic finance is concerned. So we have, a wide range of investor groups, coming from the banks to the insurance companies to the pension funds to the asset management companies, and even the state quasi-government bodies are also investing into equities and sukuk for that matter. So just to recap and summarize, Saudara Zakariya, before I hand it over back to you, the last 3 months have been very difficult for all of us, investment bankers and bankers as a whole. But the next so-called 3 to 6 months are going to be extremely important, right? When we observe the provisions in the banking sector, post-moratorium, for example, when the moratorium ends after October of this year in Malaysia. But having said that, in the investment banking space, in the capital market space, we've started to see flurry of activities, especially in the sukuk space and as well as in the equity capital market space. Back to you.
Safri. Okay, I like the new term, or rather new name for Indonesia, the waking up giant. So it's everyone is in suspense because the giant is almost waking up and is like in full. Okay, and of course, towards the end of the day, when we talk about capital market, when we talk about banking, and we talk about regulatory, it's actually the regulators who play the important role. And you see, the outbreak of the COVID-19 pandemic has actually resulted in regulators adapting the regulatory landscape to basically accommodate and mitigate the unprecedented disruptions to companies and even individuals. Regulators have recognized the significant impacts that the spread of COVID-19 may have on the markets, organizations, as well as the consumers. And again, Shahariah advisors, by virtue that he's an Islamic financial services industry, Shahariah advisors have also started to be more cautious on the regulatory changes or enhancements, what you want to say, that could actually trigger the Sharia non-compliance event. So, Dr. Engku, based on your experience as a Sharia advisor, as well as a member of the Sharia Advisory Council of both the regulators, do you see these changes as an impediment, or do you see that as an opportunity for the industry to further expand? Yes, Dr. Engku.
Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. First of all, thank you, the organizer as well as the moderator, for posing an interesting question about the potential regulatory changes or adaptation as a response to the disruption caused by the COVID-19 pandemic to the market. As based on my observation, I think at the capital market side, perhaps the regulatory response has not been that obvious as compared to perhaps on the financial services side, because on the financial services side, we have seen the immediate response by the central bank was actually to accord a 6-month moratorium in order to hamper the potential credit crisis to the households and also to the small corporations in order to service their debt obligations. But if you look at the capital market side, I think the potential of credit crisis is perhaps not that immediately felt, although we have seen the sharp contraction in the economy due to the COVID-19 pandemic that resulted in the MCO, the restriction of movement and actually the freezing of economic activity. But the long-term impact of that sharp economic contraction on the capital market players as well as on the credit status or credit position of the obligors that has obligation on the capital market has yet to be, I think, strongly affected because I think at the end of the day, to some extent, the aggressive policy action by the central banks in actually providing a very positive environment for the market to recover and rebound. I think there's no increase in interest rate. In fact, there is actually a move towards further reduction of the interest rates. And then the moratorium and all these aggressive central banks action allows for breathing space for the market to actually recover and handle the economic impact and contraction in the market. But whether this can be contained in the long run would depend on how soon the normalcy will return to the market. As we have seen in Malaysia, we are starting to see normalcy coming into the picture because we are now at the recovery phase and businesses have started to be coming and hopefully the impact that the MCO had been causing to the market, especially to the corporations who are expected to give returns in terms of dividends or in terms of paying their periodic distribution on their sukuk. It will not be that severely impacted. At least I think in Malaysia, I hope it's not going to be that bad. Okay, so basically what I'm trying to say is in terms of the impact of the COVID-19, the possible default on the obligations of the capital market, I hope will not be happening that much. If it is to happen, then perhaps it's due to long-standing credit stress on that particular entity rather than purely because of the pandemic alone. And then when we're talking about the issue of credit stress, I think we have to differentiate between households and corporates, and capital market is particularly more concerned about corporates, whether they are in the midst of credit stress or not. Okay, so if there is in the long run credit stress, there would be some requirements for restructuring exercises happening in the market, and that will require some evaluation in terms of Sharia compliance in the way they do the restructuring of these obligations. Okay, so that is my take on that point. But apart from that, I would like to also look at some other points, especially with regards to how the COVID-19 pandemic is perhaps going to change. Is it really going to change the general outlook of the Islamic capital market in Malaysia, or the change will not be that severe in that sense? Because if you look at the early this year, or perhaps at the end of 2019 leading to early 2020, there has been a lot of positive outlook for the capital market, particularly in Malaysia, if not globally. But mainly because I think last year the capital market in Malaysia has been doing quite mediocre because of a lot of things that was happening last year, politically, economically, and whatnot. Okay, and also as a result of the oil prices and whatnot. Okay, so we see at the beginning of this year, the sentiments in the market they were quite upbeat. They were actually expecting growth in 2020 as compared to 2019. But as God has actually this time, basically we have the pandemic, and that sort of helps some of the positive outlook and the upbeats that have been felt earlier in the year. So if we look at just as a flashback of what happened last year, despite the quite gloomy picture of the capital market in Malaysia last year, the Islamic capital market itself seems to have sort of retained their growth. Like for example, in 2019, the Islamic capital market grew by 8.23%, and they registered almost 2.035 trillion ringgit Malaysia, which was actually about 64% of the total capital market. So that means the Islamic capital market have been performing well, even in the gloomy capital market last year. And they, in particular, I think the Sukuk as well as the Islamic funds has been performing quite well last year, where Malaysia has maintained their leadership in Sukuk and also in Islamic funds, where our Sukuk issuance was valued at 102.39 billion ringgit end of last year, which was actually 77% of the total corporate issuance. So this is, I think, quite unique to Malaysia, that there is a preference of Sukuk over the other conventional way of issuing debt instruments. And I think this is perhaps due to the long-standing performance of Sukuk in Malaysia. There's a lot of market familiarity for Sukuk, such that it is the preferred modes of financing in the debt space, whether by corporates as well as by the sovereigns. Even as today, I've read the news about the announcement by the Ministry of Finance that they're going to issue Sukuk Prihatin, 500 million ringgit worth of Sukuk Prihatin, which based on the announcement, seems to be like a retail Sukuk in order to finance some of the economic recovery stimulus that the government has announced recently. I think there was about 35 billion ringgit economic stimulus funding, and part of that will be funded by the Prihatin Sukuk. So that means despite the pandemic and whatnot, I think in the recovery phase, I think Islamic capital market, in particular Sukuk, has actually a strong role to play. And that is especially given the preference by the sovereign themselves in preferring Sukuk over conventional bonds. As have been evidenced by today's announcement, the first Sukuk that they're going to issue as part of the recovery process would be the Prihatin Sukuk. And together with some other initiatives, I think Sukuk can play a lot of role in order to bridge the fiscal deficit that the government will face basically, especially in meeting their economic stimulus obligations. Apart from the Sukuk market, I can also see that there may be also potential of further growth for the Islamic funds. If you look at last year, there was actually 23 full-fledged Islamic fund management companies in Malaysia, and the Islamic asset under management stood at about 180.5 billion ringgit, which is about 22% of the fund management industry. And we have seen how the Islamic funds have come out with quite a number of new and innovative investment products, like the SRI-based Islamic funds, some of the Islamic structured funds, and some of these green Sukuk funds. And in addition to that, we have seen some Islamic ETFs also being introduced. And this, I think, would be potentially areas of further development in the recovery phase post-COVID-19. And I think a lot of focus would be on the SRI fund that are focusing on socio-economic recovery of the various segments in the economy, especially the small and medium enterprises, as well as the micro enterprises as well. And the focus, I think, would be also on the provision of some essential services. I think now, due to the new normal, a lot of things are being done via digital mechanisms or digital means. So I think a lot of funding may be needed to improve provision of these services like broadband, internet access. So the digitization and tech-based funds, I think, would have a lot of attraction, I think, in the near future. And in addition to that, I think another area where the Islamic funds, as well as the SRI funds and Sukuk, can also contribute will be on the, apart from the technology, that will also be on the environment or green space, okay, as well as healthcare. And another one that I can also see a lot of potential would be the growth in the Islamic equity crowdfunding and Islamic P2P financing, especially to fund like a bridging financing to fund the economic recovery, again, of the various segments of the society, especially for the micro, small, as well as medium enterprises. And these funds and Sukuk initiative, if they are combined and linked with the other segments of the Islamic economy, basically the Wakaf and Zakat funds, will actually be a good combination to provide a low cost but more sustainable funding for the economic recovery post COVID-19, inshallah. So I think this is my take for the moment in terms of the outlook for the Islamic capital market post COVID-19 pandemic. I will give back the mic to Mr. Zakariya.
Okay, thank you very much, Engku. Okay, actually, as the time is against us, I have to open the floor for questions now. So if you have any questions or you have any specific questions for specific panel speakers, please kindly indicate. Otherwise, I will just leave it open to any panel members who would like to respond. Yeah, I have received one question here. I think looking at the questions, although it's not stated here, but I think it is. It is actually for Bapak Irwan. The question is from Irwan Abdalloh, who's asking in the sense that what is the reason for the sudden spike in the 5 months in 2020? I wanted to ask the same question, but this question came together. So maybe Bapak Irwan can actually explain why was there a spike in the 5 months? Irwan?
Actually, there was no sudden spike. Okay, it's all about the process. Okay, and first, and that month and the last month, its price is low. We talk about the at discount, right? Everybody buy. First, the price is low. The price was low, and everybody bought. And we talk about this is at discount time. And in this time, in the same time, the foreign is outflow. Okay, so we came in. That's the condition you in the 5 last months. Okay, but the key is there is no sudden spike. We talk about the process. Okay, we deliver the education. Okay, and in the 5 months, we're increasing the education via communities. That's why we call it the communities-based development strategy. We have network. We have a large network in our public. The communities is moved to grab the market. Okay, and the third one is the IDX. Okay, in the last 5 months is went to the social media, very, you know, almost more than 100 events in social media, in internet, in online, only for 5 last month. To tell to market that, hey, it's time to buy. Hey, the market is at discount position. That's the why the volume is increased significantly. That's the why our millennial increase the transaction. That's the key. This is the answer.
Okay, thank you, Pak Irwan. Okay, I've got another question from this, I'm not so sure if it's a lady or guy, Shahariah, and it's open to everyone. Okay, the question is, I invest in unit trusts in Sharia compliant funds and conventional funds. Unfortunately, Sharia compliant funds are making losses, whereas the conventional funds are showing growth. What is the reason for the poor performance in the Sharia compliant funds? Is it because Sharia compliant funds are too conservative, or what are the other reasons for that? I'm not, maybe Ms. Shahariah can actually share your thoughts on that, or yeah. Yes, Ms. Shahariah.
Okay. Thank you for the question. That's a question where I have to probe further, because we have to know what kind of funds did she buy. Okay, is it a Sukuk fund? Is it an equity, Sharia equity fund? So there's a lot of variables there. So for us to say, we cannot just generalize it's a Sharia fund and it's not doing well, and and conventional is doing much better. But we have to understand what fund it is, you know, whether it's Sukuk, it's equity, or could be a balanced fund. I wouldn't know. So, but to me, we are value-based asset managers. So to look into a fund, you have to look into a long-term value-based fund. In the sense that when the market is down, the value-based fund will definitely perform, and that has been proven. So we have to educate the investor not to think short-term, but to think long-term. So through experience and through our own very experience, the funds that we manage, like we have been managing one of the oldest unit trust funds in the world, and for 30 years, and they have been giving a double-digit return or high single-digit return. So is what kind of funds are you buying? Are you going into what style is the managing of the fund? So that has to come into detail, and you have to know that as an investor. Thank you.
Okay, thank you, Ms. Shahariah. Okay, I've got another question from AGA from IIUM. Okay, the question is actually for Dr. Mohamed Damak. How is Sukuk issuance complex compared to bonds issuance? How can we make it more attractive and competitive? So maybe Dr. Damak can actually share your thoughts on this question.
Sure. Thank you very much for the question. How is it more complex? The answer is simple. Imagine a minister of finance that needs to go to the market and raise funds to pay the salaries. Okay. With a bond, we know how it's done. It's been done for the past 400 years. You just go to your investment banker. They would take standard legal documents of one shelf, put the amount, and start discussing with their investors. You get the money in 1 week. With Sukuk, if you have a program in place, the process is as easy as that. So you have the program documents in place. Out of the program documents, you do some execution version for a drawdown of the program. It's easy. But if you don't have a program in place, you need to, and that again, assuming that your environment is friendly for sukuk issuance, you need to identify an underlying asset, identify a structure, go and speak with the lawyers, the scholars, rating agencies, and everyone else that is going to be involved in the transaction, to have your structure in place and to end up finally tapping the market. And that process, for frequent issuers or for lucky issuers, it could take a few weeks or few months. For new issuers, it could take a few years. I remember the UK announced that they will be tapping the sukuk market in 2008 and ended up issuing the sukuk effectively only in 2014. And we're talking about the leading place of Islamic finance in Europe. Now, how can that be resolved? This can be resolved by having standard legal documents and Sharia interpretation in place to make the two processes equivalent from a time, effort, and cost perspective. So if you want to issue a sukuk instead of a bond, you just take the structure that you have decided to use, plug your underlying asset and go straight to the market. So there's no longer the need to go and discuss with the lawyers, the scholars, etc., because everything would have been already standardized before the sukuk issuance. Now, are we there? I think it's fair to say that the market has achieved a certain way of doing things. Like if you look at the legal documents that were used by South Africa, for example, you compare them with the legal documents that have been used by the UK, by Luxembourg, it's pretty much the same legal documents. But we're not yet in an environment where everything and all the requirements are harmonized globally. And this is exactly what the Dubai Islamic Economy Development Center is trying to achieve. So they're trying to bring this international harmonization. And if we were to be in an environment where both instruments would be equivalent, then probably when oil prices drop, you would see the core Islamic finance market tapping the sukuk market and not the conventional markets. Thank you.
Okay, thank you, Dr. Damak. I've got one interesting question here from Nur Ain. Okay, I'd like to ask panelists, what is the prospect of robo-advisor in capital market, particularly in Malaysia? So, would you like to discuss about this robo-advisor? Maybe Prof. Dr. Engku to talk about from the Sharia perspective, can robot basically advise kind of thing. So I mean, yeah, I'm open to any one of the panel speakers.
I think from the Sharia perspective, there's not much of an issue with regards to robo-advisors as long as the parameters or the inputs or the data that has been imputed into the robo-advisor is accurate in terms of what are the determinants of Sharia compliance and what are not Sharia compliant. So that would be actually imputed into the robo-advisory system that the output would actually be something which is Sharia compliant. Okay, so it depends very much on the parameters that you put for the robo-advisor to work in. Okay, but in terms of the prospect, I think that would be perhaps something which maybe Sharia or perhaps Safri can comment on in terms of the market acceptance in Malaysia, whether it is ready for such thing to be here. Okay, because we have seen some a lot of development in terms of robo-advisory in other places in the world. But of course, I'm not sure about Malaysia, so maybe the other panelists can give some inputs on this.
Sure. Hello.
Yes.
Yeah, I think if you ask me today, when it comes to robo-advisory prospect in Malaysia in the near term, obviously the jury is still out there. In Malaysia, is all about physical interactions, and so that's something that has been going on in Malaysia for many years now. So for many clients of ours, they would prefer to see us face to face, even under this during this pandemic situation, when we wanted to have all these discussions and meetings via Zoom and Webex and Microsoft Teams, they said no, we would prefer face to face. So we will observe social distancing. So that's something that's been going on and will continue to be observed, right, for in the foreseeable future, maybe in the near to medium term. But having said that, we are seeing the introduction of robo-advisory in this part of the world as well, for very simple vanilla services. For example, the selection of stocks. When it comes to asset management companies or wealth management business, for example, when we look at the balance funds, whether we should be allocating X% to stocks, Y% to fixed income or sukuk or bonds. So that is that kind of services in the market available for the asset management companies to basically to subscribe to. So that's something which is in the market already in Malaysia. So I believe that can only grow in this part of the world. So what I spoke about in the first part of my response is actually when it comes to IPO advisory or sukuk advisory. So that goes back to the first question or second question by one of the participants in terms of the complexities of doing sukuk vis-a-vis doing conventional bonds, for example, right? So if you were to have a robo-advisory services, a robo-advisor advising someone on a wakala sukuk with multiple asset classes, so I think it will take some time, right, to get a candidate, a new kid on the block, issuer, to issue sukuk. I think Brother Damak mentioned earlier on the UK government, right, the sovereign sukuk. We started talking to them back in 2008, and CIMB was fortunate enough to have been involved in the 2014 issuance. So it took us 6 years. Even in the case of Hong Kong government, we started talking to them in 2009, and then they only issued the sukuk in 2015, 14 or 15. So it took them 5 years. So imagine having a robo-advisor trying to solve all this legal, this accounting, tax issues, and so on and so forth. But having said that, that will come, right? Once we have standardized everything, once the legal documents have been standardized, the tax infrastructure has been standardized globally, for example, that will come. Just like in Malaysia, for example, when we first started doing sukuk back in 1990, right? We were looking at a simple buy bitaman ajil and buy inah. And then we evolved into istisna, we evolved into ijara, we evolved into musyarakah, mudarabah, and now wakala, right? And so the lawyers in Malaysia have commoditized sets of documents to cater to each of the structures in Malaysia. So, I mean, especially if you're doing commodity murabaha, right? Literally every single law firm in Malaysia is able to do a commodity murabaha sukuk now. So that is applicable, that goes as well for, to the tax as well as financial advisor, as well as to the rating agencies in Malaysia. So the standardization is happening in this part of the world. So once we have everything standardized, so that robo-advisory prospect will be handy for sukuk and obviously for the IPO as well.
Okay, thank you very much.
And maybe if I can make a comment here also, I would extend beyond robo-advisory. I would talk about RegTech, because I think RegTech could help the industry of Islamic finance. I think today we live in a financial system where you have plenty of regulation, and it's almost impossible for a human to keep up to date with all the regulation and all the requirements. So having a RegTech that would aggregate all the regulations and give a straight answer, is my transaction compliant with regulation or not, would be helpful in the industry of Islamic finance. On the Sharia side, it would be helpful if we had a set of Sharia standards that are global and that are agreed upon globally, and whereby similarly you would have a RegTech that would absorb all these standards and would be able to give a straight answer. Is my transaction, if it's done this way, compliant with Sharia or not? And then you would have an answer saying this is compliant, except with that requirement or that requirement. So I would link it more with the RegTech industry, which I think in the future will or could disrupt the industry of Islamic finance.
Okay, thank you, Dr. Damak. As I received the cue to end the session, all the distinguished panel members for your valuable thoughts and time. I'd also once again like to express my sincerest gratitude to CERT for giving me the opportunity to moderate this session and be amongst the key industry leaders. Thanks also to all the participants who put the effort to join us today and raise some good questions. I know there are some other questions which I do not have the time to actually share and ask the panelists. So on that note, wabillahi taufiq wal hidayah, wassalamu alaikum wa rahmatullahi wa barakatuh. Thank you.
Thank you.
Thank you very much.
And other speakers for wonderful sharing. We hope to see you again in our next future event, inshallah. Before we end, kindly fill in the evaluation e-form, which has shared the link at the chat panel, so we can improve our future reference. On behalf of CERT Events Malaysia, I would like to apologize for any shortcomings occurred during this workshop. We look forward to welcome you again in our forthcoming events. Assalamualaikum and thank you so much, everyone.
Waalaikumsalam.
Thank you, everyone.
Thank you, Prof. Engku.
Yeah, Assalamualaikum.
Thank you, everyone.
Thank you, everyone.
Thank you, Ms. Shahariah. Thank you, Ms. Zakariya.
Thank you. Assalamualaikum.
Salam.